Hello guys, in this video I will try just to explain the mood of the stock. Now a stock is the same as a human being. Sometimes he's happy, sometimes he's mad, sometimes he's angry, sometimes he's crying, sometimes he's sleeping, sometimes he's jumping, sometimes he's said to be running, okay? Sometimes it jumps down wherever he goes. Now, what makes the stock do all this stuff? It's everything the stock is doing is the result of the perception of traders to the stock or to the company itself. Now, if I show you a chart, any chart, and they say, what do you think the stock will do? Some people will say it will go up. Some they will say it will go down. Some they say it will do nothing. It will just trend into a range going up and down, up and down, up and down. But there is nothing to be done. Now, it is your perception of the chart or of the price that makes you buy or sell or watch the stock. Okay? It's just our perception. There are some people who like mutual funds managers, it is also their perception. It doesn't mean that they know better than you in terms of stock market. They know nothing. But what they do is just they buy a stock through weeks or through months because they can't buy in the same day. I have explained this before. So when they begin to buy, they put a plan. Let's say each day they buy 100,000 shares, just an example, or 1 million shares, depending on the stock volume. Okay? They can't take all the volume of the stock. They should let other people help them. Because when the people see that the stock is going up, swing traders, they jump in and they put their money with the mutual fund money or a bank money, and there are some mutual funds that are small. Let's say a mutual fund who have only $1 billion or $2 billion. Okay, a small mutual fund. But there are other mutual funds. They have trillions of dollars, so they are more powerful to buy more from the market. Okay, so when the trend begins, a lot of people jump in. Some they discover this stock at the beginning, some they discovered in the middle, some they discovered at the end. But most of the time, who discovered the stock at the beginning? Professional trader. They are the first. Intermediate trader or something in the middle or later. Now the beginners at the end. Now why is that? This is psychological. The beginners want to make sure they put their money for a sure thing. So what they do, they don't want to risk. They think that they don't want to risk their money. So when they see the trend is complete, they see an excellent stock, they say this is what we are looking for, and they throw their money into the trend. And the trend after that goes down and they lose their money. Now, why they don't begin at the beginning with a professional trader? because they don't know how to search for stocks, and they are not confident that the stock will go up. So they want a sure thing, and they are looking for anyone who tells them that this is a sure thing, although no one knows. Professional trader, when they buy, they don't know. They have some signals, like me, for example. I use signal, I search, I find a signal. It tells me that this stock is good. I look at the chart. If I like it, according to my criteria, I buy it. Now, it doesn't mean that if I buy it, the stock will go up as if I know the future. Man, I don't know the future. I am like you. If the stock goes up, and I think I'm right, I will stay until I take a big chunk of my profits and then exit. And this is what I do in terms of trading stocks in swing trading. This is what I do always. I don't enter today and exit tomorrow and I have $100, $200 and I am happy with that. This is not swing trading, man. You can do day trading, yes. If you have 100 or 200 or 500, this is day trading. But for me and for all the swing traders, we are for big profits. At least it is called profits. That's why we say winner. A winner is not $100 or $200. That's why I try to teach you through what I know, and I share with you my experience. If you want more detailed things, you should go directly to my training, and you just go there and you begin your training. Now, if you want a general thing, as I talk to you right now, I will give you the general idea how things works in the market. Now, what will happen when the mutual fund or the mutual funds that they have this stock, they will sell? You will see a very long downtrend. It means the stock goes down, then it goes up a little bit, then it goes down and down and down, up a little bit down, until they sold all their shares and they get rid of it and they buy another one. Some people stay there 1 month, 2 months, 6 months, 1 year, 2 years, until another swing trade, until another mutual fund, the big one, they get interest in this company and they buy it again. Okay? So this is the cycles of a stock. But there are some stocks, they have small corrections and they can continue to go up because there is a big interest from the big guys. That's why the stock will go up and up and up. You have seen maybe Apple before. It was $100 and then it goes to $750, I think. And then we have the split. Okay? So you understand? It means when there is an interest, the stock will go so wild up, making a very large uptrend. Now, when the mutual fund took their money from a stock, the stock will have a very long downtrend. The example is Twitter. It was 74, now you see it's 17 or 18. Okay? So you see how things work. If there are other mutual funds, things will go better for any stock again and again. So it's not really the company itself. It's the perception of the buyer or the seller that makes the face of the stock in the chart. When you see a chart and you like it, there is a big trend. I have shown you utilities index with some stocks. You see how nice they are. For 6 months they go up. Okay? Now if you are a swing trader and you are following how to search for stocks, especially with my strategies, you will know this from the beginning. You will see this trend forming and going up and up. You can enter at any time you like. The trend began in January. Now we are in July. Okay, so we have 6 months. Any month you enter, you can make money. Even if you come at late, like in June, you can make money also. Okay? Now, sometimes the stock doesn't do nothing for a long time. 6 months, 1 year, 2 years, it doesn't do nothing. It goes up a little bit, goes down a little bit, up, down. Because there is no big buyer that pushes this stock up, or a big seller that make the stock goes down. Okay? So, as I told you, things change in the market. A winner of this year, it could be not winner the other year. It could be, but it can continue. Okay, there are some stocks that they stay many years. Although when you see a daily chart, you see that there are a lot of fluctuations. But when we see a monthly chart or a yearly chart, you see the stock is making a big progress. The only thing that you should do is follow the market and search for stocks and follow them. Thank you very much and have a nice day.